I just want to start with your cement sales, which increased by 72%. That's a really big number and probably speaks to how much demand you are seeing in the markets that you operate in. Talk to us about that demand.
Yes, the markets have been buoyant, and the markets, cement markets have been growing by about 14% in Kenya. In addition, Kenya is also servicing landlocked markets like Uganda, Rwanda, Burundi, Southern Sudan, and the demand in these markets are also increasing significantly. So our increase in sales, which was over 70% in the cement sector last year, was driven not only by a buoyant demand in the local market, but also driven by the exports to the inland markets.
Surendra, do you think, I mean, there are reports that are saying that there is some slowdown in Kenya's construction industry. Do you think then that going forward, most of your earnings will probably come from outside of Kenya?
Well, one view is that because of the rising interest rates, it may have some impact on the construction sector. Well, that is true, yes. But then we have another segment which is growing very rapidly, and which is the infrastructure segment. Now, true investment in the infrastructure segment in Kenya has started only for the last 5 years. And there are several new road projects, there are several new bridges which are coming up, there are power projects which are coming up. We are looking at the Lamu port coming up in the next couple of years. So our estimate would be that the segment may change. From the housing segment, we may have a growing infrastructure segment to service. But going forward, Kenya's cement market would grow, as would the export market.
Let's talk a little bit about your operating margins. They declined about 2% in the reporting period, and some of the issues that were cited were rapid increase in cost of electricity, fuel, and imported space parts. There were increases in costs there. What has been your strategy to mitigate some of those costs, that you would only have a decline of 2% and perhaps not more?
Well, the first thing was that our volumes increased significantly. And because our cement volumes increased, there was a benefit which we got in terms of economies of scale. So to a large extent, it was the efficiencies in manufacturing which the company had, which was able to a large extent, mitigate the impact of the increasing costs in the other segments.
Talking about
now,
yes, go ahead. Go ahead.
The increase in costs came about mainly due to the rapid depreciation of the Kenyan shilling in the last couple of months of 2011. Now, the shilling has strengthened back. We are now operating at a level of 84 to a dollar, and to a large extent, the increased costs which we had because of the depreciating shilling have counterbalanced themselves already this year.
There is that construction that's happening in Dar es Salaam, Tanzania right now, where you are expanding into that area, and you say that the plant that you're building there is going to be commercially viable by June this year. What are your expectations from that particular plant?
Well, it has a capacity of 750,000 tons of cement in Dar es Salaam. We have another additional 750,000 tons of capacity in Tanga. The Tanga capacity would be coming up in early 2013. Now, at the present moment, the Dar es Salaam plant is in the commissioning stages. We have already started the cold commissioning of the plant, and we should be in commercial production in the next 8 weeks or so. And the Tanzania market also has been growing rapidly. It's been driven by the housing segment as well as the infrastructure segment. And it has grown by about 14% last year. And we expect Tanzania to continue the same momentum. And therefore, going forward, we expect that we should be able to fill in the gap which is there in the demand-supply situation in Tanzania and operate to nearly full capacity in that market.
Surendra, to support the expansions, you've said, your company has said that it's raising a further $50 million through a convertible instrument. What is your strategy when it comes to minimizing the dilution effect of your existing shareholders that you have right now?
Now, I think from the very beginning, we have been putting into place financial strategies which would ensure the least dilution for our existing shareholders. Now, what we have done as a policy is that we have gone out and we have leveraged the balance sheet of the company to the extent possible and raised loans to fund our expansions. As we go forward, we would also need equity capital because we are growing on an average CAGR of over 30%. This loan, which is coming in from AFC, which is actually a convertible note, is equity capital which the company is raising. The loan would be converted over a period of 6 years into ARM shares at a price of US dollars 3.2, which is a significant increase on the existing share price of ARM, which is close to $2. Now, the purpose of this investment is that we should have the financial capital which is required to grow further than what we have already done. Now, though at one side it's dilution of the shareholders, but at the second time, on the second side, if you look at the earnings per share, this investment is going to increase the earnings per share of our existing shareholders, and therefore we feel that this step is a step forward in creating more value for our existing shareholders.
You seem to be operating a lot in East Africa right now, but it seems as though, I mean, just reading through your company results statement that you released, it seems as though you're wanting to expand more into Southern Africa as well. Just tell us about some of the markets that you're eyeing right now.
Well, we are actually looking at the entire Eastern and Southern African markets. There are several opportunities. As you are probably aware, the entire African markets at the present moment are deficit of cement. Going forward, we feel cement is a key ingredient which will drive the GDP of these countries. I mean, not only from a social point of view, but also from an economic point of view, we feel cement is going to be an increasing important segment in the countries. We have been looking at different markets. Several markets are in our consideration where we are looking at the raw materials, where we are looking at the markets, we are looking at the legislation, so on and so forth. At the present moment, we are already in 4 countries, which is Kenya, Tanzania, South Africa, and Rwanda. And our eyes are set on the entire East and Southern African markets.